All right. Hello, everyone. Welcome to Chapter 16, Tax Basics. And what a perfect chapter. I don't know if I'd call it perfect, but it is perfect timing, as you might think of, for doing this in late March because, the tax day is just around the corner, April 15th. It sneaks up on us pretty darn quick, don't it? So get those receipts together. Last year's tax return, any expenses that you may have, and get some money back. So, as most C corporations are preparing for April 15th as well. If you were an S corporation or an LLC, you would have had to got that information to the IRS by March 15th. That way you could pass through your income or loss on to your personal tax returns. But let's go ahead and get started with Chapter 16, Tax Basics. And our objectives, we are going to discuss what an employer identification number is. We'll discuss federal business taxes. We'll have a summary of those tax forms. We'll discuss income tax, self-employment tax, federal employment taxes, penalties. If you don't pay, they'll come knocking on that door. And information returns like a 1099 miscellaneous. That's pretty much if you're hiring subcontractors that are not incorporated or an LLC, you would send them a 1099. And then a tax calendar and North Carolina state tax specifics. So you got to do federal tax returns and state returns. But your employer identification number, or EIN, as people will call it. Before you become an employer and hire employees, you need this number. And you can get it fairly quick. So once you form your corporation, LLC, S Corp, or whatever, you can even get a federal ID number if you're a sole proprietor. Most people use their Social Security number, but you can choose to get a separate EIN. The only entities that do not need it, though, are sole proprietors that have no employees and file no excise or pension tax returns. They don't need it, but they can get it. And then LLCs with a single owner, where the owner will file employment tax returns. And so most people still get it just because they don't like using their Social Security number. I want everything separate. And, some people will, argue with me on that. But like I said, it's a personal choice. And you would have to make that decision yourself if you wanted to get the EIN or just use your social. But we're required to be in that C Corp. And I love it. I love it. It may hurt us in the long run, like, trying to get a loan for a house or whatever. But I want my personal expenses as well as my personal belongings separate from the corporation. For one, you never know when you may want to sell that corporation. You got to protect yourself. Federal business taxes. The form of business you operate determines what taxes you must pay and how you pay them. The following are three general types of business taxes that you may be responsible for. Income tax. Yeah, if you're making money, boom, you're gonna do it. Self-employment tax. And that's pretty much, the best thing to do, my accountant told me, is set yourself up as an employee. Do it. Write yourself a check. Take out the taxes as a payroll tax, and you're going to cover yourself. And then employment taxes, for your employees out there. The employment tax item is the number one reason the IRS will knock on that front door. I've had a scare with that. I was on a job site. The wife called and said, look, you need to get home. There are two blacked out Suburbans, tinted windows. They look like the Men in Black movie, the space aliens with Will Smith. And she said, my wife said, they presented themselves with their federal ID badge that said U.S. IRS, and they had a sidearm. And so they came to do business. And what had happened, we had gotten off a little bit on our employment taxes over several months. I downloaded the wrong QuickBooks tables to do our employment taxes and got off about $2,000. So it wasn't that bad, but they're like, we need that payment today. And I'm like, I didn't mean to do that. They're like, we understand. And we know that this was an honest mistake, but that's still no excuse. We need our money. And so they got a check from old turf teacher. Income tax. All businesses except partnerships must file an annual income tax return. Partnerships, they file that information return. And basically what they're doing, all that is passed down through the partners that are in the business. The form you use depends on how your business is organized. Self-employment tax is Social Security and Medicare tax primarily for individuals who work for themselves. So like a sole proprietor, they're going to be responsible for that. But if you have a corporation or whatever, and you set yourself up as an employee of your corporation, that's completely legal to do. And you pay all of those taxes with payroll. Makes it a lot easier. Using a payroll service, I love it. We don't have to touch none of it. It is handled strictly by our payroll service, and I wouldn't trade that for the world. Your payments of self-employment tax contribute to your coverage under the Social Security system. So basically, it's your retirement. When you decide to retire, you're actually paying into Social Security. Social Security coverage provides you with retirement benefits, disability benefits, survivor benefits, and hospital insurance. You must pay self-employment tax and file the schedule self-employment if your net earnings from self-employment were $400 or more. Well, hopefully you're in business and you're making more than $400. You must also pay self-employment tax on your share of certain partnership income and your guaranteed payments. So, guys, basically what I'm telling you, you need to talk to a CPA when you are running your own business. I mean, it really, really pays for itself in the long run. When you have employees, you must have certain employment tax responsibilities and forms you must file. Most employers must withhold, except few, to deposit, report, and pay the following taxes: Social Security and Medicare taxes. That's called FICA. You'll hear that, or you'll see that on your pay stubs if you're working somewhere. Federal income tax withholding and federal unemployment insurance, the tax, FUTA. And basically, that is if you get laid off, you're able to draw unemployment. Circular E, a comprehensive reference providing thorough instructions on calculating, withholding, and depositing employee taxes. You can find it there at irs.gov and the NASCLAforms.org. Social Security and Medicare taxes, your FICA, pay for benefits that workers and families receive under the Federal Insurance Contributions Act, FICA. The Social Security tax pays for benefits under the old age, survivors, and disability insurance part of FICA. The Medicare tax pays for benefits under the hospital insurance part of FICA. So, you're guaranteed to have health insurance when you retire because you've paid into it all these years. Now, who knows? I may not even get Social Security. You know how the government's taking all that money and spending it elsewhere, but that's a whole different ballgame. The sad part is Social Security and Medicare is dwindling down, and it's sad seeing some of these elderly folks struggle with hospital bills, even with Medicare and their small Social Security checks that you're getting. So it's a great thing to have, but it shouldn't be the only thing that you have. You should, be able to set a little money aside being a business owner. Federal employment taxes, the federal income tax withholding, you generally must withhold federal income tax from your employees' wages. To figure out how much to withhold, use the employee's Form W-4, the employee's withholding allowance certificate, and the methods described in previous chapters. So basically, that's how many dependents they have and whatnot. So that's one of the forms that every employee gets right off the bat. Give them that W-4 along with the application, and you're able to get them in the payroll system. Your deposit schedule. There are 3 deposit schedules, either monthly, semi-weekly, and daily. You got a big payroll if you're doing it daily. That is tough. I know a lot of people that do it even weekly, even though they're required to do it semi-weekly. They just go ahead and do it. Prior to the beginning of the calendar year, you must determine which schedule you are required to use. You are a monthly scheduled depositor if your total payroll tax liability for the previous 4 quarters was $50,000 or less. If your accumulated tax liability is $100,000 or more on any day during the deposit period, you must deposit on the next banking day. So, like I said, that's whew. Your payroll is $100,000 a day. But look at these big companies that have to do that. If you report less than $2,500 for the quarter, you can use IRS Form 941, the quarterly employer's tax return, to make payments by the due date of the return. We do it weekly. just based on our payroll service that we use. So we go ahead and pay everything that week. My parents get maybe sometimes a little upset thinking about that because they used to do it on the quarterly. But when we signed up for the payroll service, which I think has been one of the best things we've ever done, they take care of it and they pay it on a weekly basis for us. Federal unemployment tax, or FUTA, part of the federal and state program under the Federal Tax Act, FUTA, that pays unemployment compensations to workers who lose their jobs. Basically, if you get laid off, you're going to be able to collect a check if it was no fault to you. You get caught smoking dope or whatever and wreck one of the company vehicles, you're not going to get it. I mean, you got to be, laid off because there's no work. You can't quit and you can't do something stupid that gets you fired. You got to be able to be laid off just because there was no work or whatever. So, it became a hardship to you. It's not your fault. You are generally liable for both state and federal unemployment taxes if you pay wages to employees totaling $1,500 or more in any quarter of the calendar year. You had at least one employee during any day of the week during 20 weeks in the calendar year, regardless of whether or not the weeks were consecutive. So if maybe you're hiring, somebody, hey, I can work you this week, or I'll work you in 2 weeks again, stuff like that. You got to be able to, if it's 20 weeks, you got to do it. The FUTA tax base and tax rate is calculated at the current prevailing rate. And then before FUTA taxes, report them on Form 940, the employer's annual federal unemployment tax return, or if you qualify, you can use the simpler Form 940EZ. Penalties. Accurate and prompt deposits are required to avoid penalties, which can range from 2% to 100% of your tax liability. Penalties may apply if you did not make payroll tax deposits on time, make deposits for less than the required amount, and do not use the electronic federal tax payment system, EFTPS, when required. So it can get a little hairy there thinking of all the stuff that you have to do. So, again, my advice, when you start a business is to talk to that CPA. Your 1099s, you may be required to file information returns to report certain types of payments made during the year to persons not treated as employees. These are your subcontractors. Form 1099 miscellaneous must be filed by January 31st for the prior year's payments. That way they can get their 1099. You give it to the subcontractor and then mail it to the IRS, and then that way when they do the subcontractors do their taxes, they're paying the tax on that. Now, if they're a corporation, you don't have to send them the 1099. These are going to be sole proprietors or people that are using their social security numbers. Tax calendar. By January 31st, furnish W-2 form, wage and tax statement to all employees. Furnish the 1099 to each other payee. File Form 940 or 940EZ, employer's annual federal income federal unemployment tax, and then file Form 941, annual return of withheld federal tax return. By February 15th, request a new W-4 from employees claiming a tax withholding exemption. On February 16th, exempt W-forms expire. And then by March 31st, file electronic forms 1099 and 827 with the IRS, and file electronic W-2 forms with Social Security Administration. So that's why I love the payroll service. They do 100% of this for us. By April 30th, July 31st, October 31st, and January 31st, deposit FUTA taxes, and then file Form 9041, employer's quarterly federal tax return, and deposit any undeposited income, Social Security, and Medicare taxes. That's why I like paying it weekly. I don't want a big chunk of change to leave my wallet on these dates. It's easier to pay a little bit as you go, I think. Before December 1st, remind employees to submit new W-4 forms if withholding allowances have changed. And on December 31st, W-5 form, the Earned Income Credit Advance Payment Certificate expires. For North Carolina, corporate income tax. The corporate income tax rate in North Carolina is 6.9%. Tax credits. North Carolina provides several credits for new and expanding businesses that may be taken against corporate income tax. It is best to consult a tax professional when determining which credits to apply to your business. And your estimated tax is a declaration of estimated tax must be filed by a corporation for each taxable year in which it can be reasonably expect a state income tax liability of $500 or more. So basically, if you do good this year, you're going to pay taxes next year on what you've done this year. But what if you have a bad year next year? That's where they get you. You could do $100,000 this year, and you got to pay the tax on it, and then you're paying estimated taxes on it for the next year. And boom, what if you have a bad year and you only do 25,000, but you're paying that tax on the 100, but then you get it back the next year. It's kind of crazy. North Carolina state tax specifics again: franchise tax $1.50 per thousand, minimum of 35. Sales and use tax 4.75% state and 2% local rate of tax of 6.75% rate. And then withholding tax, you must submit a completed business registration application to obtain a withholding tax ID number, and each employee must furnish you with a signed North Carolina Employees Withholding Allowance Certificate, Form North Carolina 4. Withholding tax returns are filed on a quarterly, monthly, or semi-weekly basis. And there is a 10% penalty for late payment of tax due. So, guys, you have to stay on top of your taxes and all of these dates when running your own business. Now, it's kind of like workers' comp and general liability. A lot of people don't do it. And are you going to get caught? Maybe, maybe not. But guys, this is the one thing you don't want to get caught doing is cheating Uncle Sam, because they can lock you up for it. You know, it might be one of those nicer jail cells, you know, you got a TV and, you know, couch and all that stuff. You know, they call it, what is it, white collar crime, but nobody wants to do that. Nobody wants to go to jail for tax evasion. Just do it. And yes, there's going to be times that you feel like that's all you're working for is to pay taxes and insurance. And trust me, it does, but it is still worth it in the long run. Guys, thank you so much for joining us here on Tax Basics, and I will see you in the next lecture.